Okay. Um, let's see. Are we live? Yes, we are live. So, hey everyone, and thanks for jumping back into the cryptoverse. Today we have another DCA live with James from Invest Answers and Rob from Digital Asset News. And you should be able to find a link to their channels down below. So I would encourage you to go subscribe to them if you're not subscribed to them. We have a lot of stuff to talk about today. So we will be going through a lot of different topics. We'll be talking about things like, obviously, we'll talk about Bitcoin, but we'll talk about things that are going around in the world. Obviously, there's the recent. It's kind of weird to say, right? But the recent Russian invasion of Ukraine, soaring inflation, and how everything sort of relates together. But one of the things I wanted to mention, before we get started is, we're going to be talking about the markets and everything, and pretty crazy time right now in the world. So just take a step back and recognize, or at least puts things into perspective. I guess the things we're talking about here in the cryptoverse. So with that said, it's a pleasure to have you guys back on the channel. It's been a couple of weeks since we've been on this channel, and I want to talk about a lot of stuff. Okay, so we're gonna ask some pretty tough questions here, and we'll just go through. We'll talk about everything. We're first going to talk about the geopolitical events. We're then going to go to talking about the Fed and interest rates. We have potential interest rate hike coming up here in March. Then after that, we're going to be talking about Bitcoin and altcoin positions during times like this. And then we're just going to sort of wrap it up. And at the end, we'll have a lot of different questions from the audience that you guys can answer. So with that said, let us go ahead and jump in. So the first thing we want to talk about is the most pressing thing, right? And it's this most recent invasion of Ukraine by Russia. And one of the things that we want to do here, though, is we want to tie it back to the markets and talk about that. So one thing we've seen before with major events like this is that they can make markets extremely jittery. And I mean, we've already been in a downtrend for a few months. Traditional markets, Bitcoin, we've already been in a downtrend for a while. And on the day of the invasion, the stock market, the bottom fell out, and then we had a very quick recovery back up to the upside. And the same thing happened with Bitcoin too. We went all the way down to 34K, and then I think we're now at 38K or something like that. So James, I wanted to take it to you first, James. My question is in general, do you think that this most recent invasion of Ukraine will it lead back to a risk on environment? Sort of thinking like wartime economy. I don't know about stuff like that. Or do you think we'll be risk off for a while? What do you think? And specifically, could you, if you had to take a stab at where will we be a year from now with respect to the stock market? Do you think they'll be higher today, or do you think they'll be lower today? Because if we look at what's happened in the past, it tends to actually sell off beforehand, and then over the next year, things start to do a little bit better. So I'll let you take that question. I know it's a lot.
Yeah, no, it's an interesting situation. So I've been analyzing markets for over 3 decades, and markets turn faster and recover faster each and every hit that they get. I go into the age-old thesis as well as tied to that. There's simply too much money out there that needs to find a home. You can't afford to not be in the market, and everybody is racing to front run. So everybody, like I don't think I'm the only guy that 8 to 10 weeks ago said this is going to happen, moved to 30% cash, getting ready for it. But when it does hit, there's a rush of people to get in and buy the dip. So yesterday was staggering. So I did analyze historical crash numbers over the last 70, 80 years. Your typical fall on the announcement of a war is about 1.2%. The typical recovery period can range from 20 days to a year, depending on where you are. But yesterday was stunning because we saw from the beginning to end, we saw from the gradual decline to the bottom, it was 5% on the stock market. But the 6% rebound, which exceeded where we were, was just staggering. It all happened in the space of, I think it was about 9 or 10 trading hours. And that was just, zoop, zoop. And it was stunning because I jumped in the night before the stock market crash. I bought a couple of cryptos, which were super low. I mean, we're talking Luna in the 40s, Avalanche at 64, waiting to get back in, got back in at last. Solana was like low 70s, and all moved up 20 to 40% in about 36 hours after that. And then I got into things like NVIDIA, and it's just the wicks. You had literally minutes to nail the bottom and before things shot back up again. Square is up 27% today. NVIDIA up nearly 20%. MicroStrategy up 70 points. And all of this happened. So I just think there's too much money on the sidelines waiting for a home. The bond market needs to move over to crypto or equities or whatever else, or who knows what asset. So yes, risk on is the way we're going. I think we'll talk more about that as well. So I hope that wasn't too long-winded, but it was a strange time. And I too, like you, Ben, I feel bad. There was some, because I disclose all of my purchases, and there's some people who are kind of saying, you shouldn't be doing that and saying that, but I always have to be very open and transparent with everything that I do. And I told people that this is going to happen, and then I felt guilty doing it but I'm not the only one doing it as well. Everybody does that, so it's a strange situation.
Yeah, well, I mean, I know that you took advantage of the drop. You were telling us in real time that you had been saving 30% of your cash. Take advantage of that. I think you did a great job at nailing that bottom that we had. But yeah, it's a difficult time right now, and with regards to risk on versus risk off, we also saw gold shoot up and commodities shoot up, and then they came soaring right back down right as Bitcoin and equities went back up. Rob, what do you make of all this? This invasion of Ukraine and how it's going to generally affect the markets over the next year?
Well, I mean, first of all, you should never feel bad about a situation, and also, first of all, so I have to use my ear pods. I'm going back to the old days because they're doing construction on my house, so forgive the audio. But you should never feel bad, because I mean, you have to only take care of your sphere and what you can control. Nobody can control the war. Nobody can go over there and fight the war. Nobody can do really much of anything. So you need to pay attention to what is important to you and your families. And I think that's the big takeaway that I've taken, throughout the wars that I've already gone through. So how I see it is this. I mean, we could all be right. I hope we're all right. If this is just one of those small, individualized, localized skirmishes. So the real question is, does this become in the future? Because at some point, this is going to come to an end. Ukraine will probably fall. I don't know how long it's going to take. But the next question is this going to be another Cold War like we had from 1945 to 1985 with Russia? Or is this going to lead us to something even more grandiose? And I think if you look at something more grandiose, I won't say it, but there's a lot of more problems that you could that could encompass in that situation. But let's just say we don't go down that route, right?
Right.
Let's just say that we are just here and it's just Ukraine, Russia takes it over, and then everything's good. Maybe, right? But there was this graphic that was put out by a bunch of people. I think people on Twitter have seen it. And it was the same thing. It was just take care of yourself, which is, and they talked about it, by the invasion. And they looked at Vietnam War, Gulf War, Afghanistan War, Iraq, Crimean, and it was the same thing. There was a monstrous dip, and then people bought it, and then it just kind of just took off over the next 6 months, 1 year, and 2 years. So I think people that were just waiting for it are like, yeah, I can see where this is going. But that only works out if it only stays right there. But I see there's a lot bigger things down the pipe.
Right. Yeah, I would agree. It's interesting when you think about this, when we talk about markets pricing things in, and in pricing in like interest rates, pricing in war. It's a very complicated dynamic. Kind of brings us back to something we've talked a lot about recently, and that's inflation. And one of the things we've discussed is, coming up in March, we're all expecting the Fed to raise interest rates. And it's been all over the place this year, from expecting 3 hikes to 6 hikes. It's been all over the place, to expecting like a quarter point move this March up to a half point. What do you guys think? Do you think this most recent Russian invasion of Ukraine, do you think it's going to make the Fed less hawkish? Are they going to continue to proceed? Obviously, from the perspective of actually trying to get inflation under control, it would make sense to raise interest rates. But where do you see that going here? Because I mean that's only a few weeks away now, in March. So what do you think that's going? And I'll start with you for Rob on this one.
Yeah, this is a complex thing. I mean, if it is, first of all, if they do raise it, then I think it's already priced in and not a big deal, right? But I think one of the problems here is that with what happened with Ukraine, now the U.S. is already sending troops over to help our allies with NATO. And of course, because there are a lot of people who really are profiting or can profit from war, the war hawks, they'll say, you know what, we need to fire up the U.S. war machine, and we need to protect ourselves. And how do we do that? Well, we need a lot of more money to put into the defense budget. So if you haven't heard it now, you're going to hear it coming up pretty quickly. And if that happens, then with the Fed, they can say, you know what, we don't want to disrupt anything too much, so maybe we'll kick it down the road. That's maybe what could happen. But in all honesty, if they raise it a quarter or a half basis points, would it really damage or really long-term damage the market? I don't think so. So if they do, that's not a big thing. My big question though is, will they do it 2, 3, 4, and 5 times this year? I don't think they can do that. I think that's impossible, but time will tell.
Yeah, I mean, I agree with a lot of what you said. They're sort of caught between a rock and a hard place, right? Like, do you raise them a lot, which is what they should have done a while ago, and sort of hurt the stock market, or do you do you become dovish for a while and just make inflation sort of run its course? Did you have something to say?
No, I was going to say just one more thing. I know that James talks about there's a bunch of people coming in, and we saw a big sell-off from these big corporations Q4 2021. You saw Musk and Bezos. Between them, they sold off like $20 billion worth of stock. So there should be at some point where they're going to buy back in. That should help the economy. If that does help the economy and the Fed's like, well, okay, we're doing okay, then they will definitely raise. But I just don't see them raising it more than.
Yeah, well, we know they like kicking the can down the road. That's something they do quite frequently. Yeah. James, what do you think about this? Do you think they'll still raise by a quarter point in March, or where do you see that heading given the most recent developments?
Yeah, it's funny. I spent a lot of time thinking about this. So if you look at Wall Street, like Goldman Sachs, they think the Fed will hike rates every meeting this year. That's 7 or 8 hikes. But I think they're delusional, because they don't seem to understand the macro, GDP, the debt ratio, debt servicing, etc., and the lag between money printing and increase in inflation. So even if they really jammed the foot on the brake, the economy, and destroyed it and tailspun us into a recession, it still wouldn't solve a lot of the problem, because inflation takes a long time to work through the system. Now, there's another angle to this as well. Actually, there's a whole bunch of angles. One is the war will spike the cost of commodities and energy, whether it's uranium, magnesium, gas, oil, etc. This is going to drive inflation higher. But the interesting thing is the government now can use this as a narrative to say that, hey, inflation is not caused by money printing, it's caused by war. Mm-hmm. And so they got to get out of jail free card. The other angle is as well, it is a political election year, and the Fed has to play nice with the president, or else they're all going to lose their jobs. And so I see, in answer to your question, 4 hikes at most, maybe 5. If you asked me 2 weeks ago or a week ago, I would have said a 50 basis point hike in March. I've ratcheted that down to about 25 basis points right now. Mm-hmm. But 7 to 8 hikes are definitely off the table. Again, they cannot, as I mentioned, slam the brakes in the economy, because it's very sensitive right now. There's a lot of things on the brink, a lot of things showing cracks. And it is a very unsatisfactory situation. And the only way to resolve it is literally gentle movements and blame other things like war for inflation. Right. And the Fed have lost complete control of everything: monetary policy, inflation, etc. And I was actually looking at the, debtclock.com this morning. And it's so funny. I look at it a lot. And in December, I marked down the numbers. We had a 29 trillion in money supply. It's now nearly 31. And that's, the money printing hasn't stopped. And I tweeted that earlier today as well. It keeps going up, and they can't stop, they stop the money printing, if they raise the interest rates, unemployment goes through the roof, economy will crash to zero, etc. And Europe is already showing a lot of signs of weakness too. So that's my short answer.
Well, no, I mean, I think that's a good answer, and I think it makes a lot of sense. I mean, people are going to be hurting already with what's going on in the world, and you can see this as a perfect excuse to kick the can down the road or to make things easier. And I also think, this is this is the big excuse that they can give, the clear and obvious excuse that they could provide. With that said, it brings me to another question, and James, I'll go to you on this one first, and namely that question.
Make it an easy one.
Yeah. Well, it's sort of just piggybacking off the last one.
Yeah.
But okay, so we talk about like cycles of interest rate hikes, right? We've talked about that before, and one of the things we sort of think about is risk on versus risk off, right? So risk on, equities, crypto is doing really well. Risk off, you have things like gold that are making their first move in a decade, right? You have the dollar, the US dollar currency index in an uptrend in a typically risk off environment. But one of the things that I think is interesting is you actually go look at the last cycle of interest rate hikes back in, we actually had for in 2017 when Bitcoin hit its peak, we were actually in the middle of a period when they were raising interest rates. But it seems like there are a lot of people now that are assuming that because they're raising interest rates, Bitcoin is just done for a while. What do you guys think? Do you think that Bitcoin can still put in new all-time highs later this year? We're not necessarily saying it has to do it next week or next month or even next quarter per se, but do you think there's a chance that Bitcoin could put in new all-time highs this year, even amidst the Fed raising interest rates?
Yeah, so the whole speculation of the hike was triggered by that James Bullard guy from the Federal Reserve. I think he was St. Louis or something, Missouri. And that rattled a lot of people. But it all goes back to, I think, the decoupling. So when does Bitcoin become a risk-off asset? So another thing I tweeted, I think it was yesterday, was the correlation between gold and Bitcoin. And yeah, gold had its day in the sun. It lasted about 2 days. And then it fell 3 to 6% in the last 2 days. And Bitcoin's up 13%. So we're already seeing Bitcoin becoming, it's kind of this hybrid. In some people's lenses, it is a risk-on asset, and others, it's a risk-off asset. When we go back in time, and I remember I started looking at Bitcoin hard in 2017, but the last bull run technically began in 2016 through the very end of 2017. And that coincided perfectly with an increasing bond yield rates, Federal Reserve hiking interest rates. So there's complete correlation there. In fact, there's a graphic somewhere that shows you. So it can go both ways. I think the more important narrative is what is safety as we go forward, and that will drive where the money flows. When people catch on with all of the confluence of events that are happening in the Ukraine, people freezing bank accounts, like my son in Denmark knows somebody in the Ukraine who is Danish, who had money, but they couldn't get access to the cash to buy a car for an extortionate price to drive back to Denmark. They couldn't get out. So what do? They traded with Bitcoin. They bought a secondhand car for Bitcoin. And I think it's on Twitter as well. It's all over the place, the same story. But it shows you such a small world it is. And then the stuff that's happening in Canada, it's everybody can no longer trust the traditional systems. And people will be looking for this alternative to become self-sovereign in these times of emergency. So I think everything that's happening right now, it couldn't be a more perfect marketing ploy for Bitcoin, if you ask me.
Yeah, I mean, it seems like a lot of free marketing, to be completely honest, like tons of events over the last few months, a lot of free marketing for crypto in general. And even going back to that Bitcoin wallet recently that was told to freeze assets. Like, we can't do that. It's like, that's the point of the entire system. Rob, what do you think? Do you think Bitcoin in this current environment that we're in, a theoretical rate hiking cycle, you think we could see higher highs later this year, or do you think Bitcoin's just kind of going to be done for a couple years?
No, so we're in a very turbulent time, and I remember just how much there was this. I don't know if you guys have heard about this. It was called the coronavirus, and it was in 2020, and when that happened, it just kind of just exploded Bitcoin because, well, first of all, everybody could stay at home. They could do all their research. They figure out, hey, this is actually, a pretty good risk off asset if I want to do some things. So now you fast forward to today, and then we just saw what happened. I got to tell you, between us, I was a little bit surprised when I first saw that gold went pretty high. I think it hit $1,920, $30, $40, something like that initially. And and then what's amazing to me, I was like, wow, maybe the narrative that Bitcoin is, gold 2.0 and is one of these risk off assets and is a store of value is failed in this situation. But then we saw it just do this, inverse. So I take a look at that, the Danish story, I can understand. And then I can just see like if you're trying to do risk off assets, we shouldn't really be talking about gold. Gold is it is there, the store of value, it can do things for you. But in reality, I know gold bugs will hate me when I say this, but we've already, not for the market cap, but we've already kind of established that we are a little better than gold and what it can do. The real question is can Bitcoin jump frog and leapfrog into fiat, more specifically the US dollar? If we can go from there and say, this is the ultimate risk off asset, not cash, which is what everybody went to when you saw the NASDAQ and the S&P 500 tank, and then of course it rebounded today. If we can do that, then yes. And I think if we take a look at usually what happens with these buyback programs for corporations, because hopefully that means that more institutions are coming, because like James did say, you gotta park this money somewhere. If you're in cash right now, what are you doing? You're losing 20%. If you believe the number, 7 to 20%. So there's something that you should really get into, and the best asymmetrical bet, at least if you could put in 2, 3, 5%, would probably be Bitcoin. So yes, I see how I could do it, but the problem is getting people to understand that. I just don't see what else we need to do besides more education.
Yeah, I think that's a fair point. I think the volatility recently it's turned a few stomachs for sure, just in the crypto markets in general. And I know some of the things we've seen is looking at the prior peaks, 64K, 69K. We saw a lot less on-chain activity, during the second peak than the first peak. But one of the things I wanted to talk about is we saw this recently, and I know Rob had mentioned this before when we're with reference to altcoins, is that when Bitcoin takes those hits, when it's already down 40% or something, you can see altcoins get pretty ugly. And we saw that happen when Bitcoin went to 34K. Now, a lot of those altcoins are off their lows, 10% or something. But a lot of them are still, at the same price that they were when, say, Bitcoin was previously at lower prices. And so not all of them, right? There's always a few altcoins that outperform Bitcoin or keep pace with it. But certainly there are a lot of altcoins that are down. And for instance, we can imagine a scenario where, like, if Bitcoin were to go back to 36K, or something like that, it could still put in a higher low, but some altcoins could still put in a lower low, just because of the risk involved. And I think until we see that confidence come back to the market, where we're more confident in Bitcoin, it's developing more of that bull market structure again. You can see that with altcoins. So Rob, I'll go to you first on this one, because I know you talk about. I've seen some of your videos where we talk about take profits, right? Like, if you want these things, that you have to take profits, right? Hodling is just a meme. And so if someone's looking to get back into altcoins, right? Like if you're looking to get back into altcoins, or you want to pick up a position, how do you navigate this part of this, like the part of the cycle where you see a low, you go buy an altcoin, Bitcoin bounces, you feel like you're Warren Buffett, and then the next week the NASDAQ puts in a lower low, and then consequentially Bitcoin goes back down, which, by the way, I was impressed that Bitcoin did not put in a lower low, despite the fact that the NASDAQ did. I think that shows a lot of strength from Bitcoin, actually, but a lot of altcoins did put in a lower low. So how do you navigate that if you're looking to get an altcoin position again?
Yeah, well, first of all, I don't think Bitcoin has gone through this. It's gone through the virus, it's gone through a war in Afghanistan, but this is a whole new war and a whole new situation. So I'm impressed at how well it's done so far. Having said that, I have been failing at some things. And I'll tell you that when I look at this whole market, like yesterday, in my head, and we talk about this on the show, right? We say, okay, when there's a dip coming and it's pretty big, we will dynamic dollar cost average, right? Ben, you're the one that actually told me about that one. I was like, it's a pretty good idea. So yesterday, when everything went down, I'm like, I just don't think this is the low point. I think it's going to go lower. And what I did was I just said, you know what? I think it's going to go lower. And I just sat there. And the only thing I did was I let my Voyager daily buys just trigger. Mm-hmm. And I'm like, I don't know where it's going to go, but I'm definitely going to buy this at this point. Should I have increased that by 10%, like we talked about, or 30%? Yeah, I should have, because, you know, just to take a look back, hindsight's 2020, mm-hmm. But I didn't, because I'm like, you know what? I'm just going to do this. So if I'm going to tell anybody to do anything, the great thing about setting these things up and having them automatically go is it takes out the emotion out of the equation totally. So yesterday, what did I buy? The same thing I buy almost all the time. It's Bitcoin. It is Ethereum. It is Chainlink. It is Cardano. It is Algorand and Gala. I think a couple other ones I did too. And why? Because it's out of the equation. So if you want to just get into it and go, you know what? I don't know if I can, do these things and buy every single dip and whatever else. Just set it up like that, and then over time, you probably thank yourself.
I mean, yeah, that's great advice, right? Come up with a strategy and stick to it. Don't change it based on the events in the world. I think acting deterministic about anything is dangerous. So assuming it has to go to a certain price or assuming it doesn't. I know James. James came in pretty heavy yesterday during that drop, and I imagine James, you have some. And I know you were also talking about some of those stocks you picked up. I imagine you're doing pretty good right now, right? Yeah. Maybe you could walk people through kind of your thinking on that, because I know you were talking about saving cash for a few months for a very specific situation like that. I think you said you were like 30% cash. You're waiting for the opportunity. Opportunity presented itself, and you jumped on it. So how did you come up with that strategy, and then how do you keep the conviction to carry it out when the time comes?
Yeah, well, I've learned in experience. I've made all my money by what I call running into burning buildings. When everybody's running for the door, I run in. And probably the most important thing in markets is timing. So my approach is a little bit different to Rob's. I hoard cash when I get very nervous, and that happened the end of December. If you saw any of my videos for the last 10 weeks, you see I was concerned about Taiwan and Ukraine. And people were saying, God, why do you keep talking about that? It's never going to happen. And it's not related to crypto. Yes, it is. And it's related to markets. So everything is related. Politics, money supply, macro, geopolitics, it's all tied together. And you need to be aware of the whole situation to make decisions. So I was moved to a very large cash position. Normally when I get nervous, it's 20% cash. This time was 30% cash. And I have my laundry list of things that I want to pick up that I don't have. So one of the things I did do way back in, I think it was August or July, I can't remember, but I sold Avalanche at about $50. And I've been waiting to get back in because of its strength. But I was patient. I don't chase. So Avalanche, when I hit about, I think it was 64, I sniped it right when they started rolling the tanks in. It sounds really bad, but the minute the tanks started rolling in, that's when I started deploying at the same time, pretty much. Picked up Solana, Avalanche, and Luna, a lot of Luna. Luna was interesting. So when you look at the last 5 days, from the beginning of the gradual dump to the aggressive dump, and if you compare the charts of Luna, Ethereum, Bitcoin, Solana, Avalanche, Phantom even, they're all at the same place they were 5 days ago, with the exception of Luna, that's up 40%, and Phantom's down 10%, but the rest are there. But the journey over that 5 days was extremely volatile. Mm-hmm. And you had massive 20, 30, 40% moves in things like Avalanche, Solana, and Luna. And that's when I snagged those and got into those additional positions. There's another thing I did as well. I picked up a lot of NVIDIA, a little more MicroStrategy, and Google in preparation for the 20-for-1 split. And NVIDIA was an interesting one because I've been waiting for a year to get into NVIDIA, and that was my opportunity. So you'd know this, Rob, from being a sniper in the woods, military and stuff, identify what's on your list and just wait for it to come into your trap. And that's what I've always done. And then final thing I did, which is interesting, the day that all this happened, I did a swap. I took about $25,000 in Bitcoin and swapped it for Solana at about 0.0022. and that's worked out too. So I'm kind of reallocating, resorting stuff around out there in my portfolio. But I was just waiting patiently, and actually I was getting very frustrated because nothing was happening and the market was going down. But when you saw that wick going down, it was interesting. But a question for you, Ben, as well, and Rob, if you look at the Bitcoin price, it's making higher lows all the time. People aren't getting that capitulation event, despite all the people calling for $10,000 Bitcoin and $20,000 Bitcoin. But we had the $29,000 low in the summer. We had the $33,000 low on the 24th of January. Then it went to about 34.5, and recently it just hit 34 as well again. Do you see that higher low being a bullish indicator that there's simply more accumulation and there's less supply, and that's being reflected, that people on any dip is being bought up quicker, like front running the market?
Yeah, I mean, I think it is a bullish indicator. My thinking on it is, I don't really know what Bitcoin's going to do. Like I've tried to predict it in the past. It's really challenging to predict. So I just have a strategy and just DCA and wait. I would say one of the most bullish indicators for me right now, and it's sort of a weird one, because I think a lot of people might look at this and say it's a bearish indicator. But and I've talked before about like the idea of like a really lengthened cycle, like where we might have some like macro peak out in like 2023 or something. The Bitcoin dominance. I look at that and I say, you know what? Historically, when we go into a very macro bear market / crypto winter, I would say we're in a bear market right now, but I'm not necessarily saying it's going to last, a year and a half. But one of the things we see with the Bitcoin dominance is it shoots up like crazy. I mean, it goes up back to like 60, 70%. I mean, here we are, Bitcoin's below $40,000, and the dominance has basically been stuck around 40 to 43% over the last year almost. It hasn't really moved that much. Altcoins like Luna, you're talking about Luna, Avalanche, Solana, Phantom, they're all showing a lot more strength than I thought they necessarily would at this stage. Because a lot of times if you're going into a crypto winter where you're going to see altcoins drop 98%, you wouldn't expect that strength. You wouldn't really expect that. So I am optimistic. With that said, I will say that it is always possible we could see lower prices if the stock market, is going to put in a lower low. So I'm not going to close my mind off to that. I know it's a possibility. And the only reason I say it is I've been burned many times in the past by assuming something was the bottom. I remember buying Bitcoin at 6K in 2018 in like October, November, September timeframe. I thought I was smart. I was like, I'm buying Bitcoin at 6K, and then it dropped to 3K. So I think it's a bullish sign. I think the fact that altcoins are holding up is bullish. My main concern just remains with, how is the stock market going to behave? And if we put in lower lows over there, I'm not really sure how Bitcoin will hold up in the short term. Regardless of what happens, I think they'll all recover eventually. But I think it's a bullish case for sure. Rob, did you want to take an answer on that?
No, I just want to piggyback on one thing you said. Everybody out there, statistically, a lot of people have just got in 2021. What Ben just said is something you should all remember. I messed up by buying Bitcoin at 6K. Think about that right now. That is laughable. That is laughable. So just remember, like, that's bad, Ben. Yeah, 6K. Jeez, awful. So just remember that when you're like, oh man, I really screwed up. If you don't like the price and you don't like the price action, it's like the rain in Puerto Rico. Just wait half an hour, it'll probably change, or a little bit of time. So that's all I got for that.
Yeah, it's a good point. I should say though, during that 50% drop by Bitcoin that happened that time, altcoins dropped like 80% more.
Yeah,
it was a brutal time. I think one thing that's really interesting and I've noticed about this market cycle is it seems like there's a lot of new people that they've been very much optimistic for a long time, and you know what? They've been rewarded so far because Bitcoin is still above $30,000 despite everything that's happened. And then you also have all these people that have gone through prior market cycles who have all this like PTSD of like, hey guys, like you listen to me, like I know this seems bad, but it could get worse, So it's an interesting dynamic between, seeing people try to warn people, but also say, well, it could still go up, but always remember it could go down. Anyways, let's get to the last question. And then by the way, as I ask this question, if you have any questions for James and Rob, put them in the chat and we'll try to get to this. So the last question I have is, like, we all want Bitcoin to go up, right? And it does seem like there's a narrative that could be forming over, this year, going into next year potentially, where we do see another rally. A lot of Bitcoin rallies are fueled by some type of a narrative. And the one in late 2020 and early 2021 was obviously like institutions are coming, get the Bitcoin before institutions buy it up from you. Don't sell your Bitcoin because you're just selling it to the institutions, right? This was the narrative that really drove that rally. It was one of them. Obviously, there's other things here, right? There's DeFi, there's NFTs, there's a metaverse, tons of other things, layer ones. But institutions was a big one. And then now we're sort of looking at it like, well, what if the next narrative is like, all right, well, all these banks are freezing people's accounts. You want to be able to have access to your money. If we do go back into a risk-on environment, we could see things picking up pretty quickly. Even at the end of 2018, we had a 50% drop in the price of Bitcoin, and then it went up 4.5x over the next 6 months, right? So, it was a pretty crazy time. So, what can people do right now to plan for that? Because I think we probably would agree that it's inevitable for a Bitcoin rally. The only question, it's somewhat deterministic to say it's inevitable for a Bitcoin rally, but I think the only question is when will it happen, right? So no matter when it happens, what do you do to plan for it? Do you have your system in place to take those profits? What do you think? Rob, we'll start with you on this one, and then after that we'll take questions from the audience.
Sure. Okay. Well, I'm gonna be honest with you. I'll tell you what I'm good at. I'll tell you what I'm not good at. I'm pretty good at DCAing, buying dips, telling you the news, doing some pretty good research, finding out a project I want to get into. Great. What I'm really bad at, and I'm really bad at, is taking profits. I talk about taking profits. I will do it. I take it. And what I'll try to do is so dip comes in, okay, like yesterday. So I bought up a good amount, but it was all the same things. But I'm going to wait till I get up like another 20% increase because I know it's going to come at some point. And if I need it, which I have to do it, which I do, I'll take the money that I put in and I'll take it back plus another 10% if I can, and then put on the sidelines and wait. The problem is that I'm sure there's a better way to do these things. And one of the things I will tell you is, I know for me, as April comes up, that's tax time for the US. So just be aware that those are the times when you might see a little bit of price action. And that's people like me who have to take it for the taxes. So moving forward, I am here to learn from you guys on this one because maybe there's a better way. So I'm just gonna throw it back.
All right, James, what do you have? Are you already have a plan in place, or do you just kind of see what happens and then make your decisions later on?
Yeah, so 2022, we knew it would be bumpy, a lot of sideways chop, as they call it.
Mm-hmm.
So I'm going to be ruthless around holding far fewer assets and taking profits, hedging far more aggressively than ever before. I've already started that. For example, I went long into Amazon and immediately it bounced to 3,200. I went short Amazon and covered that at about 40% of what I sold the out of the money calls for. So I'll be doing far tighter, far more aggressive swing trading because there's just too many dark clouds on the horizon. We're not going to have our 10,000% gainers we had last year. We knew that. Mm-hmm. The money is going to gravitate towards the best assets. You're seeing that in the stock market right now as well. When the money flows into the stock market, it goes to the black holes first. Same thing in crypto. We're seeing that. So I suggest for people, be very aggressive in profit taking. When you double your money, take your initial investment off the table. Number one rule. Mm-hmm. Second of all, try time things, move to cash positions after a nice comfortable period, like we're getting a bounce now. But as soon as a dark cloud emerges, wherever it might be, more warplanes over Taiwan or coming close to the Fed meeting in March, move a little bit to cash in case there is a surprise that will drag the markets down. And you jump in and then you jump out again when it gets high. And that's kind of my plan. And still keep on what I call layering into really good names at really low prices that have really good fundamentals, whether that be an NVIDIA or a Solana or a Luna. These are just, I think, good places to be, and stack some Bitcoin, but hedge it as well.
I think that's, it makes a lot of sense. I think the advice, that you said to, you want to be more careful in your, what you have. This isn't the year for 10,000% gains and obscure micro caps that were shilled on Reddit, right? It's the year to focus on the projects that actually have value and hunker down in those for a while, and to be cautious because there are things, right? There's the March meeting by the Fed, probably going to be some volatility around that. Obviously, there's going to be more things happening over in Ukraine, and maybe there will be something in Taiwan, right? You really don't know. what's going to happen, but we are definitely in a more volatile time right now. All right, so I think we have a little bit longer to take questions from the audience. If you guys have any questions for James or Rob or me, feel free to go ahead and ask those, and we'll try to get as many of them answered. So let me see if there are any good questions already here.
Yeah, as we get the questions, I will tell you one thing that I have no problem selling right now. It's real estate. Have you seen the prices for everything that's out there?
Yeah.
Jeez.
They're crazy.
They're crazy. Yeah, we just had to sell one of our homes in Houston because of an HOA thing. And it was like from the time that we put it on the market, and it's not even on the market, it's just in one of the listings. They have 8 people who want to see it. 8. And they haven't, and they're always talking about offers. And it's crazy times.
I was actually noticing that some like home building ETFs, I believe, were actually in a pretty big downtrend over the last couple of months. I don't know if it's because I mean, the prices of a lot of things have gone pretty high, and maybe people can no longer, or maybe suppliers can no longer offset those costs to the customer because the customer can't afford it anymore. I don't know. But yeah, we'll see what happens. All right, so let's see what questions we have here. So someone has asked, some of these questions we've already seen before, so I don't want to ask the same thing we've looked at in the past. But all right, someone says, why is the dollar looking so strong right now with inflation? So I guess the question is, if inflation's high, why is the dollar moving higher? Either you guys want to take that one?
Yeah, actually, the dollar has retreated a little bit. It hasn't actually gone up, but you got to remember, the dollar is benchmarked against a basket of shit. Sorry to use that word, but if you look at, you think the U.S. prints a lot of money, the Fed prints a lot of money. Go have a look at the European Central Bank. Go have a look at the Canadian Bank. Go have a look at the Bank of England, Bank of Australia. They have all been printing even more as a percent of GDP than the U.S. So again, I hate to quote Jeff Booth again, but you can't measure the system from the system. You got to look, be that alien looking down on Earth and looking how everything is so relative. So all fiats are going to zero eventually. We just don't know when. Even Charlie Munger said that. Him and I agree on very few things, but we agree on that. So that's the problem we have right now. It's all made up. The whole fiat world is a made up world. And I go to that debtclock.org or debtclock.com. It's fascinating to watch.
Yeah. I mean, it's true though. Like it's a measure of the valuation against a basket of currencies that basically the U.S. just trade with, right? So it's like if they're all printing money, how do you measure it? Here's a good question. This is something that has been in the news recently, so it's very relevant. And honestly, I don't know the answer to this question. I'm not that familiar with how it might affect things. But one thing they've said is, look, we're putting sanctions on Russia, right? But one thing that's been mentioned is, well, what happens if you block them from using SWIFT, right? And how would that affect things? Clearly, there's a lot of countries in Europe, I think, and various places are not super keen on doing that, whereas other ones might be. What do you guys think? What do you have any opinion on what the ramifications would be on a worldwide scale if Russia were excluded from SWIFT?
Yeah, if they did that, that would be like a nail about this large into the US dollar, and it would drive de-dollarization overnight instantly. And that's the reason they can't do that. That's why the reason the sanctions that the US and the UK are placing on Russia are like a little bad Ben for buying Bitcoin at 6,000. It's a joke. It's completely comical. And Putin knows this. He plays so many moves ahead in his 3D chess game, as I call it, that he anticipates every move made by the Western world. So he can do whatever he wants. And that's the problem we have right now. So yeah, if they did, that would kill the dollar, and that would destroy the US's ability to sanction any other country in the future. Everybody would immediately move off the dollar and Bitcoin would skyrocket.
It's an interesting take. I mean, honestly, I have no idea what would happen. But that's...
So walk me through that, because if you're going to take them off the SWIFT system, that means they can't transfer any type of currency anywhere around the world, because SWIFT is just a messaging system. It's old, it's archaic, it's built in, I think, in the late 50s, early 60s. It's still in the same place, and it's it's really what we do for remittances all across the globe. So if we stop that, they can't pay other people in dollar or in any kind of currency because it fits the whole SWIFT system. So you're saying if we take them off altogether, they can't pay anybody anything, right?
It would make them seek out an alternative.
Yeah, and well, here's the thing, and this is what the people have been talking about. It's amazing how fast that they were able to fast track those legalization of crypto and how they want to do things. So it was pretty fast, it was pretty amazing, and we know what's all happening in the background. But I got to tell you, like with this whole thing with SWIFT, there has to be some kind of repercussions for what's going on. And I'm not here to tell anybody what to do, but I'm just saying that for these sanctions, if we limit, like I'm part of the Biden administration, but like if we can limit these things, I mean, I think there has to be something that should be done in this situation at some point. But I don't. I mean, if we take them off the SWIFT, take them off the SWIFT. And then what?
If we take them off the SWIFT, then that forces Russia to deal with Germany for gas, to deal with China, to deal with the whole African continent with a different mechanism, and Iran and everything else, and that would eliminate the reliance upon the dollar as the world's reserve currency overnight. That's why the U.S. can't do it.
So here's the issue, because they're big in energy. They're producing like 9 million barrels of oil per day. I think they're like the second or third producers of oil, right?
12% of the world's supply.
Right. And then, of course, you have the United Arab Emirates and you have the United States. So I believe that was the whole conversation between the United States and Germany. Go, look, if you want to get off this, we'll help you out, but you have to go against them. And that's what it seems like to me. And if they can go against them, then it kind of comes to us. Now we have to produce more barrels of oil. But the only way to do that is to go into these sanctioned or these areas that weren't drilled before. It's one of those things where I think about, if you can move ahead of Putin, and I know you think 3-4 things ahead. I think he's I'm not going to say it here, but I think if you can do that and say, this is where we need to go. If you want energy, we can give you energy. More dependence this way. It's just one of those things. My little thoughts.
No, I mean, it's good to hear these thoughts. I mean, I think it's a good question because it's something that has obviously been in the news recently, and clearly, the U.S. is very hesitant to go down that route whenever questioned about if they're going to do it or not.
Yeah, that's true.
I think they said that it would, be sort of a last resort type thing or something. All right, so let's see what other questions we have. Okay, so
there was a question I saw, the monthly chart on Cardano. Somebody asked a question of you on that.
There's a lot of political questions. I don't want to get too political. The monthly chart on Cardano. I mean, the monthly. I mean, we're gonna try to stay away from a lot of the political stuff. I mean, of course, talking about events I think is good, but not getting into too deep into it. Yeah, the Cardano chart on a monthly. I mean, I put a video out on this a couple days ago. A lot of altcoins, they look pretty weak right now, right? I mean, we know that, and that's why I was saying earlier, when Bitcoin's below these key levels, anytime it dumps, a lot of altcoins can put in lower lows, and we're sort of seeing that, and that's sort of the lesson, right? Like that, just because you're at the bottom of a support level, it doesn't mean it has to hold if Bitcoin dumps, right? Like, during a downtrend by Bitcoin, support levels can become memes for altcoins. Like they can. What's more important, I think, is can Bitcoin break the downtrend, and that will bring back the more positive sentiment in altcoins. Until that happens, I think the momentum is where the momentum is, and it's not really any more complicated than that. All right, let me see some other questions. Someone asked about VeChain. I was looking earlier. If you guys look at the VeChain ETH chart, it's actually at a low, like a historic low. It's only been here like 4 or 5 times, and every time it bounces off those levels. I was looking at that recently. What do you guys think about VeChain? You have any insight into it?
I give it to Rob first.
I used to own it. I used to own it because I thought it'd be great for supply chain tracking and medications, pharmaceuticals, and also for imposters or for fakes. But it doesn't really do much. And I think there's other chains that could probably do a better job. And so I'm not I don't hold it anymore. So I'm not big into it.
Right.
I'll never forget. I do this thing called Should I Buy series, and I did a Should I Buy on VeChain. I think it was May 2021. And I did my 2030 price prediction of VeChain at 33 cents. And the internet tore me apart. They said it would be $10 by Christmas. So nice to have the last laugh there. It is a purely speculative asset. It's too tied into China. If you're into crypto for what crypto is, that is not one you want to touch because of the huge risk of China behind it as well. That is not a place where you park money ever. And I know we have lots of YouTubers that pump it like crazy, but I think it's going to be garbage.
Yeah, I mean, I think right now in general altcoins are incredibly risky. Like I always have trouble buying altcoins when Bitcoin's in a downtrend. I prefer to see Bitcoin not look so awful because the bottoms can just fall out really quickly, and then it sort of makes those previous price predictions so comical. Like there were a lot
Yeah.
of predictions of cryptocurrencies that were going to be certain prices by Christmas, and most of them didn't actually pan out. But I mean, hey, who among us hasn't called for a price that didn't actually pan out? I mean, it happens to anyone who's been in the cryptoverse. So it's just kind of you have to take it in stride. All right, let's see what other questions do we have. Okay, so I mean, a lot of these questions are pretty. Guys, let's raise the quality of some of these questions. If you want to talk about if you want to talk about an altcoin, give a question about it. Don't just say, "What do you think about this?" um, Someone asked a question, which is kind of an interesting question. They said, like, okay, well, obviously, I mean, and we'll stay on topic. Try not to get too political, of course, but like,
Bitcoin just blasted through 39K. I just thought I'd insert that.
all right, sweet. But
That's good.
so
We did it.
so Russia, invading Ukraine. What do you guys think? How would it affect things? How would it affect Bitcoin if or the markets in general per se if Russia were to not stop with Ukraine?
Yeah, interesting question. They're not going to stop. They're going to gradually. I think a lot of people think this too, but Putin wants a legacy. He is 68, 69 years of age
I
now,
think he's
coming on
69.
70.
Yeah.
He will be in office for, I think, the next 15 years because he organized that for himself. What a leader. That's a great democracy. Anyway, I think he wants to, if you look, I have this weird theory, and sometimes my theories are very weird, but sometimes they come true. I think Xi and Putin have made an arrangement, and he said, I can get things for you if you get things for me. And the world will be run by key elements and minerals and energy that is required to run the world. And if you look carefully around Russia, a lot of the former USSR states, they have the stuff that Xi needs. And I think they're working together to plot to acquire these assets, starting with the Ukraine. Ukraine is, I think, the third richest mineral country on earth from natural resources and minerals and energy and everything else. They hold more uranium than anybody else, more manganese, and a whole bunch of other stuff. It's also a key route to Europe. So I think it's just the beginning. That's why I'm very, very concerned about 2022. And that's why if you make profits, take them.
Mm-hmm.
Yeah, that's the scenario that plays out in my head. I mean, if we're talking about superpowers getting together, I mean, that's your worst case scenario that just got unfolded right there. And I always look at it like this, like, just like you said, the legacy. But if Putin goes for Ukraine and Belarus is right there, why wouldn't we go there? And then also what's next to that? Kazakhstan. So you take up one of these, the former USSR and start to reorganize into the shape that you had it before in the glory days. That's how I think it'll go down. And then if they start to pull in other superpowers, now we got a bigger problem. And that's when things really start to get heated, not fall apart, but then you start to see the alliances and then the markets will shift. But I mean, unfortunately, I hate to say this, but I mean, what's good for a market sometimes? Wars. And I think that's one of those things. That's not good.
Yeah, but I mean, we've seen that before. That was sort of like the first topic we touched on at the beginning was I think the average return 1 year after a major conflict starts tends to be double digits, right? I think it might be double digits on some of the things, like on some equities and stuff. It's kind of interesting, right? Because you might expect it to go down, but it historically has gone up. I think it's just because the countries turn on the printing press again and they mobilize, like they get things moving, and they sort of do, or they ignore all the other problems in the short term because of the more pressing issues at hand.
Look what's going on over here, and then we're doing this over here.
Right.
So,
right.
Yeah.
Someone's asked a question. So I know you guys have talked about Luna some. So someone's asking, do you think UST can become the dominant stable coin?
It'll be number two. I think if things work out for Luna, the way Do Kwon is managing the project and the $1 billion they just got in liquidity, I think it has a clear shot of overtaking Tether. But USDC will be hard to displace because of relationships with Circle and other Wall Street type shops. So I hope things work out for UST, because I love the fact that they are really focusing on a true decentralized stablecoin that nobody can interfere with. That would be a game changer. You know, the SEC is trying to subpoena Do Kwon, and he's like, bye-bye. You know, I'm a Korean guy living in Singapore. You can't touch me. So it's super interesting. But I do believe UST could still be that little bit of house of cards. Not sure. But maybe UST could be number 2 after USDC.
Mm-hmm. I never liked Tether. And everybody, when I first got in, everybody talked about how great it was. And I'm like, I don't trust it. I don't trust what's going on behind it, and the very kind of like flippant about what's going on. I like USDC. The only thing I don't like about USDC is when it's on the Ethereum network, the fees are crazy. Unless you go to Polygon, then it's great. But then you just have to get it over there. That's the thing. And then switch it all back.
Right. Yeah, I generally use USDC as well. Any times in the past where I've had to use USDT, because sometimes they don't, I mean, things have gotten better recently, but in the past, they didn't always have all the stablecoin trading pairs for every cryptocurrency. So you might have to use one, but then I would just transfer it out mostly into USDC. All right. Well, you know, we've gone for about an hour. I think, you know, we've talked about a lot of stuff, you know, Bitcoin, inflation, you know, this war in Ukraine. I think this was a good episode. Thank you guys for coming. I would like to remind people that if you like this weekly show, DCA Live, we actually do it every week. But I think next week it'll be back on James's channel. So make sure you go subscribe to him, and then go subscribe to Rob's channel as well. It'll be on his channel the following week. We just sort of rotate it every Friday. So yeah, thank you guys for coming on. It was a pleasure to have you here. Any last words as we head out here?
Well, just be safe and respect one another, and fingers crossed for the people on the ground of the Ukraine. They're my parting words.
Exactly. Yeah, and hopefully it gets better. And that's all I got. Sad times.
Exactly.
All right,
Thanks
thank you guys.
to the audience. Thank you, Ben and Rob. You guys have a happy Friday.